Alrighty, TGIF. Thank goodness it's Friday. Doc's been like a busy bunny. He just keeps on hopping along. Anyhow, good morning, good afternoon, good evening. Lots of wild stories. Lots of, you can see how the markets are. We have, on J4X, we're having a little problem getting our things up there at the moment. Let's see what the numbers were. So, net jobs up 399. Was that 3? That must be 399,000. And I guess that was the high, and expected was 175,000. Wow. Let's see what they're doing to the stock market on that. And let's go like that. So it looks like did they drive it down? No, I guess, let's see, let's switch it over to that side of it. Right there. So you can see right there, this is where the numbers came. Are we up and running? Yeah, we're up and running. Am I looking at the right thing? Oh, that's the daily. Okay. Let's go in and look at the... And that's the intraday. That's intraday. Why is it not upticking? Let's give it a reload. Where's the reload? There we go. There's a reload. And I guess, maybe they did switch the front month. Are we seeing, let's see if we're seeing some ticking going on. Okay, there we go. All right, we're starting to get something. Yep, I see the volume. All right, so I guess 7:30 would be right there, right? So there's 7. Let's see where the news came out. The news came out right here. Right there. The news came out. Let's widen this out a little. It doesn't look like it's up that much. But that's where the news came out on that one. It's 7:30 right there. So it's moving up a little bit. We're seeing a little bit of strength. What are we doing here? Dow Jones Industrial Average is like flat to down a little bit. Let's see where this oil is doing its thing again. It's starting to make its lift again. Gold's up $5, which is not too bad. We're starting to see some interesting thing here. Now, it's a little surprised Bitcoin backed off. Oh, look at that. Okay, cool. So, what else? And the end result is that the dollar index looks like it's moving up. And, let's move that over. And, let me go to the chat line, too. Good morning, all. Sorry about that. Where's the chat line? Right there. And there's the chat line. And let's get Doc up there and see if anybody has any questions to start off with. But the dollar index itself is, just kind of bouncing around that 105 area, not really pressing too hard. The stocks look flattish. There's Janos. Doc, I won't be around today taking wife to lunch. That's just nice. That's very nice. Notification set for 12:34 GMT. Okay, that sounds nice. That's what you should do. Let's keep the wife happy. Got to keep the wife happy. When they're happy, you'll be happy. All right. Let's see. Where's that? So we have jobless at 5.5. Previously it was 5.5. We have net jobs was a big jump. And jobless rate, we're looking for 5.5, and it's a 5.5. So there's no real surprises, except for that one number. Let's see. Dismiss. Yeah, and let's see. Not getting... Let's see. Where is our Hinky Ashkey? Where did that get to? I did go into the file and workplaces and saved, where's it at? Saved, not sure why we're not getting our fast and slow stochastic. And I don't see a button, so I gotta go, let's see, let's make this bigger. Oh, I guess maybe it's down on the bottom. No, that's the position. Let's see. I know there's a previous one. Open start. Let's see. Where can we go? There should be a previous. Let's see where our previous technical work got to. Let's see, right there. Let's just do that. Recent indicators. There we go. Hinky ASCII. There's that. And let's get recent indicators. There's the stochastic. Let's get the slow stochastic up there. Recent indicator. Where's it at? Right there. There we go. That's better now. So you can see here, they just don't seem to want to let go. There's a little red there. We're under the 105. Let's put it up on J4X too, at the Chicago Quant at the same time. Let's see who's dinging away here. There we go. All right. What else can we say about that? I guess what it comes down to is we're just trapped. Oh, you know what? I was thinking this morning. I was doing my charts this morning. Here, I want to show you this. I thought this was really curious. Check this out. Look at the 30-year. 30 years right on the edge. Let's see what they're doing to it now. Did it bust through? Yes, it did. Look at that 30-year. It's trying to get going. It's trying to lift back up again, and it's making a higher low. And the weekly, look at the weekly, how close it is. Only minus 21. And the fast, which closed on Friday of last week through the zero line, is also turned up. So, you know, again, markets, they want to believe that the Fed is at the end of rate increases. I believe they're going to do a couple more quarters, but the thing is that they're looking at it down the road 6 months from now. They're looking down the road, not tomorrow. And so you can see the weakness we've had, but look at it. It's even when you look at this pattern right here on the technical analysis. Let's see. Right there. Where's that box at? I want the trapezoid box. There it is. I mean, in many ways, this thing looks like right here. This pattern is looking like a reverse head and shoulders that's developing. In other words, they may not take out this low. This may be the higher low, and the market may zigzag a little bit. And the next thing you know is that, look, if the market won't raise, if the market knows that interest rates are pretty much at the end of the road, and 2/4 point increases more is not exactly the worst thing in the world, they're going to start anticipating and they're going to start buying, and that's what I've been saying they've been doing all along. They're acting like as if they just don't believe the Fed can influence them enough. Yeah, that's what it comes down to. And I find that to be fascinating on many levels. You know, I saw that this morning when I was doing the charts, and I thought, look at that. The thing doesn't want to let go. You know, it's trying to get into a buy, and the weekly is right on the edge of the buy. And so now I didn't even see until I started talking about it with you a few seconds ago. I didn't really think about that reverse head and shoulders, but there it is. And at the same time, we're finding that the bonds are trying to make a higher low and try to take out this high right here. Let's emphasize it right there of about, you know, just literally last Friday. That's really what we're looking at. All right. From there, let's where do we go from there? Let's jump. Oh, you know, one thing. Let's take a look at the bond on J4X too at the same time, and we'll put it up on the new platform. Let's see, where is it at? 30-year bond right there. And let's put it up on Chicago Quant's new platform we're beta testing at this point. BZF maybe? No, that's Brent. Let's see. It's here somewhere because I do know I have the bond. I think that's it right there. No, that would be NYMEX and they are CBT. So, not that. There it is right there. I bet that's it. Yep, that must be it. Because it's trading at, let's just, and that's at Head and Shoulders we're talking about too. Where's it at? That's there. Yeah, okay, so let's do this. We'll emphasize the Head and Shoulders even. There it is right there. Doing the same thing as, let's give you that picture too so you can see it. Right there. Yeah, so what we're looking at there is, that makes sense, that's the bond. And you can see the daily is trying to get through the zero line just like on Chicago Quant. Let me do it like this. So it'll just flash back and forth. Trying to do the same thing, right, where's Mr. Mouse? Right there. It's trying to climb through, same way. And the weekly, doing the same thing, trying to climb through real close. And when we go over to again, that one right there, there it is. And we slide down just a little bit more. Same situation, not as robust. And notice that the fast is just, is that the zero line? That's the zero line right there. So banged up, it went into the plus last week and it's kind of falling off now. Let's see how see this fight play out over the next couple of days. That'll be interesting to see. This is a classic, what do you call it? A bench test. See what the 30-year does. That's the bench test right there. All right. Where do we go from here? Let's go to the euro. Let's see what they're doing to the, well, we saw what they're doing to the dollar. So let's see. That euro tried to get into a buy the last couple of days and has failed at it. Every time they lift it up, they knock it down. And there it is right there. Still being knocked down. You see the fast at 10 and change, the slow at 9 and change. It's trying to get through the plus line there. Let's put it up over here. There it is right there. I didn't open it up yet. Now it's open. Let's see what the euro looks like. That's the Turkish lira. They went into the sell yesterday. That was curious. But then again, that thing is so, upside down. Okay, now look at that. Same situation like the bond. See, that's what's always interesting when we talk about the bonds and the bond vigilantes and, all that stuff. What it really comes down to is bonds can lead markets. In this case here, the bond traders, which is a non-listed market, what that means is that it can move like the wind in a matter of seconds. You can, because when you're like a listed product, like at a futures exchange or a stock exchange, what happens is that they try to control the volatility. They have circuit breakers and they have all kinds of concepts. And so, what's interesting is that what we're seeing here now is we're seeing the euro trying to bottom and lift up, and we obviously we assume just because of the fundamentals, if you see the bonds rallying, in other words, increasing in price and interest rates dropping, you would see the same thing go on with the stocks. Not the stocks. We all have stocks too, but the currencies. the currencies follow interest rates and inflation and more of the fundamentals. So there's the perfect example of something is going on in the bond market because we're seeing the bond try to find a bottom. We know that the Fed is going to raise at least 2 more times, and at the same time, the currencies are trying to find a bottom at the same time. Giannis was saying to me, there's a lot of longs out there in the euro. They keep on trying to pick the bottom. And in all essence, they should just follow Doc's math. We get into a weekly buy what you want. At least you have a 8 or 9% chance out of 10 winning. So let's see now. Let me see where we at here. Let's put the cable up there. All right, right there. Let's see. Right there. There's the cable. And as you can see, the cable has come down to this. I think we were playing with a Fibonacci on that. Let's take a look at that. And what is that? That is the point. That's it, 0.23. So you can see there, it's holding up. You see the weekly right there. As we widen it out again, and I'll probably have to fix the line again. The weekly is not getting, it's still trapped underneath that manifold. And you see it there. I guess, it could be next week's business. We'll see. We'll see if they start to really buy it. And when we go back, let's go back to the euro for a second. There's the euro. Same situation. The fast is trapped underneath the minus manifold. The slow is way deep underneath. I mean, it's definitely oversold. You see the daily is trying to turn. So, that's what it really comes down to, is that the bond traders or / vigilantes are starting to try to turn the market, and the central bank wants to raise interest rates. So, what a war. It's a classic war. All right, let me take a sip of I'm in coffee at this moment, not tea mode. Today I started off with tea first, then coffee. There we are. All right, from there we'll go to Swiss. And there's the Swiss. Swiss is trying to break down, which is a good thing. That when the Swiss breaks down, it's going to be a sign that interest rates are dropping here in the States. And it wasn't that much of a slope up. I mean, it's moved a good 3 handles from the 86 area to the 89 area, but it's not catastrophic. And as you can see, like the euro was the same way. It was like the 110s to the 107s. It's not the worst thing. That's a little bit. I guess that's a little less in percentage, maybe not. Let's see, 86 to 89 versus 107 from 110 to 107. So, not too bad. I think we have more of a percentage in the Swiss moving around, of course, but then the Swiss is, a smaller product compared to the euro. All right, let's see where else we go. Let's put that up on J4X. Right there. There we are. You see that the 89.10 area. If we make it the whole screen, it's been an interesting move. But then when you really look at the real action, this big drop from the 101s down to the 85s. That's not that bad. Not that bad at all. It's not. It doesn't. I think I mentioned I was going to be surprised if we broke any of these things here. I didn't really expect. Matter of fact, I thought it would get right around this area or a little bit lower, and start to turn again. So far, we're in that situation that let's just show you again on Doc's work here. We are in the plus, and when we look at it here on a weekly basis on J4X, same situation. We've been in a. I'm sure you're going to see a lot of reds, or I'm sorry, greens. You're going to see a lot of greens. Same action. 6 weeks of it. You're going to see the fast stochastic trading in the 88 area, and the slow is in the. Is that 56? Let me put my cheater glasses on again just to double check there. But I think that's what that is. 56. Is it? No. That's 86 versus 88. So we're kind of up towards the top end of the range. It's trying to tell us that it kind of wants to roll over. We go back over to Doc's work. You get that same game going on. The daily wants to roll over. The fast is below the manifold at least. No damage yet on the downside. In other words, they're not pushing it hard down yet. But I would say that could be next week's business or going into the following week, where we start to get into the third week of September. And the next thing you know is, remember, the September started on the Friday, so we had Friday and Saturday of the September already, of the first days, and then now we're on the second weekend of it coming up. And then next week we're going to be on the third weekend, it's only going to be like the 17th, next Sunday. But that puts us halfway through September. Again, I've mentioned this on the webinars over and over. This is going to be very accelerating. Congress comes back on the 12th, and the election. There's been one election debate. There's another election debate. I think on the 20th. Or the 20, maybe it's the 26th, something like that, at the Reagan Library, and then before you know it, we're in October to November to December, and the first primary elections are in January. So we're as we get moving into the congressional, the market opening up with Congress, going into the next week. I think they open up on the 12th. The day after September 11th, and that leaves us like 3.5 months before elections. That's something to really think about. I've been saying this through the summer. When the markets really, the economy starts to work again, where the vacations are over with, and the Congress is back in session, that leaves us only 3.5 months away to elections. That's real close. Now, it's not the general election, but it's the primaries. And so that is going to be something the markets are going to be watching, and they're going to participate with it. In other words, they're going to be doing, going to school and learning what the next president, who's going to be the next president, and the Congress, and the decision making, and just the whole bit. It's going to be very fun. It's going to be very healthy, because at this point in time, America is being run very foolishly. All right. From there, all right. So let's see, where are we at now? From there, okay. We'll go over to the yen. There it is. You see the yen's trying to get into that sell. You see the weekly's holding up very firm. I don't know if there's any. Yeah, I'm not. I unfortunately, I really have a bad feeling that this thing's going to find like 150. We've talked about this since the 43 area. It's now up into the 147 area, and I really feel like I guess somewhere's. I want to say the new chairman of the Bank of Japan started in June, maybe May. So, I think that what we're going to see is, the new chairman supposedly is going to reevaluate. That's what he's supposedly doing right as we speak right now. Reevaluate what the Bank of Japan wants to do with their interest rates and so forth. Now we know that's going to be a shocker no matter how you do it, because they still are one of the only countries in the world that are using zero interest rates. No, they're minus on the first 9 months or something like that. We can go and show that too, so it doesn't sound like conjecture. Let's see, where are you at here? Bonds. There. Here's a bond report. And you can see here, there's the U.S. Our 1 month is trading at 539, and you see the 3 month is trading at 540.41, and the I'm sorry, that's the 2 month. The 3 month is at 458, and then you have 5.5 in the 4 month. They're trying to anticipate that 0.25% increase again, and same thing with the 6 month. But after that, you see how it dives down. It starts to move down 539, 495. They keep on pushing it down into the low fours or mid fours at this point. Now let's look at Japan. And there's Japan. And you can see the 3 month is at minus 0.141. And then you can see the 2 year, they jump right to the 2 year, which is just 0.005, barely paying any interest. And I guess you can say, Japan has been in a stagflation now for 3 decades. And can you imagine if we can get Japan running right again? And they start to move away from, they're licking their wounds from all that money. All the money they were making into the 90s, they spent it. And they overpaid for a lot of things. And they're licking their wounds from it, and that's why the country's in stagflation. And now you're seeing the same thing happen to China. So that's that minus. I don't even know if there's a China page for they don't even have bonds that trade that liquid that you can actually see a Chinese market. I'm sure there's something out there because they're borrowing money just incredibly fast. I mean, you have UK, Germany, Italy, France, Japan, Australia, Canada, Brazil. Look at Brazil. It's got those big monster numbers, 11 and change, in the 9 month and the 1 year. They can't even go further out, and they're paying almost 12%. But there is no Chinese. If anybody knows a Chinese bond that can be followed, let us know. But right now, China's in such trouble that they can't even float bonds out in the world and participate like the other leading countries, which is, again, a perfect example of how wrong the media is about China and its growth. And that's what the problem is. The growth is disappearing. Faster than a speed of light. I'm looking at the headlines to see if I can find a Chinese bond. And they're all there. There's German and UK. And when I go to Japan, they don't, like there's no Asian page or something like that. All right, anyhow. That it seems like the last couple of days I've been trying, especially the last couple of weeks, I've been trying to emphasize: watch the bonds, watch the way they trade, watch what they do, because that's pretty much like the lead. When they move, the rest of the market will follow. All right, let's move that off the screen. All right, now. Let's see. From there, we go over to the euro, and there we saw that closed in a daily sell yesterday. Let's put a red line in there. And you can see today they're trying to get into the plus. It's at 0.01, but no majors. You can see here the weekly is trying, but the fast and the slow are minus. 67% of Democrats in America want a different candidate instead of Joe Biden. Only 33% want Joe Biden. With something like that, how do they expect to win an election? I don't know. And how can any election be close when you have that many people wanting change? Coffee au lait. Dow Jones Industrial Average down 20. And let's see what the S&Ps are doing. I think they've moved to the front contract. Robin was saying they were talking Monday, but I don't know. Let's put a front contract in on the the S&Ps. There it is, 455. Let's make a copy of that and put the front month in and see what it does. Not there. Not there. Copy it. Come on, trader. Copy it. Let's see. Copy window. Let's paste window. All right. Let's see what we can do about that. Are you kidding me? I don't have it? All right, let's load that in. Deck. 23, deck 23. Let's add March too. H, yeah, H, March. There's M, U, Z. Where's the H's at? We got to be on here somewhere. Why am I not seeing the H's? See the M. Oh, I bet they're up further. There it is. H3. H3. Oh, it's an H4. That's what it is. That's why I'm confused. There we are. 2024. By then, what's going to be funny is by the time the March contract is ready to expire, most of the primaries will be done and we'll know who is the two candidates. That'll be interesting. Okay. Here it comes. Now, close. And December. Let's see what that does. Let's see what that does. $506. Okay. It's loading as I sip my tea. Or coffee, I'm sorry. And I guess things are slow. I guess we're really looking at a very slow market this morning. It doesn't have any real conviction to it. Because we're seeing the September contract, is it September? Yeah, September contract act very anemic, very slow moving, not much. And here's December doing the same exact thing. It's like as if I wanted to say as if no one cares. But I think what it comes down to, as I've said over and over, it's really hard to find sellers. It becomes buyer strikes. The people who were buying stop buying, but no one seems to want to sell. So it drifts down a little bit from just natural selling. But it's not a wholesale, like, let's get out of this thing. It's just a sloppy, okay, we're not going to buy it at the moment. That's all. And then, someone comes in, puts a little sell into it, and boom. Because, we were up around the 4,600 area, right? No more than a couple days ago. Let's go back to, let's see what we can find here. Let's go to the 40,000, and let's see. Now it's trading with a premium of 55. It's basically has a premium of 50. Now, yeah, that's it. Not 46, 45. So we were playing with the 45 and 45.20 area, no more than Tuesday and Monday. So this thing has dropped almost 80 points. When you look at it, this is Monday, or is it Tuesday? I guess it's Tuesday the 5th. And so, we're seeing basically, it was trading in the 4,500 area, and it traded down to the 44.34 area. So it dropped basically 66 points. And now it's trying to find its bottom and turn back up again. Let's take a look at the daily. Let's go over to the daily real quick. Anybody care to see anything, let me know. We'll go tune it in. And there's the daily. Look how quiet it is. You know, it's been in a daily sell now for a full 5 days. The weekly fast broke out last week on that. Now let's see what it did on our new platform. There's SPY. There we go. Let's put that up there. There it is. Now there's our new platform, and you can see it's trading. They're trading the September contract, and you can see we're in the daily sell for 4 solid days. And you can see on the weekly it jumped up, tried to get into it in the fast, but has playing with the line at the moment. So our slow is way underneath. Our fast is trying to hover the line, and you can see it's been in a sell for 5 full weeks since back in here, and they've traded down, from here to there, lifted up, tried to make a new low, failed, and now is taking out the high where we went into the weekly sell, and at the same time we've been in a daily buy for most of that move, and then we went back into the sell, which gave it a carte blanche to be short because we were in a daily and weekly sell. The only tough part was the fast was a little above, so you wanted to be profit taker, very aggressively a profit taker all the time. Okay, there's Janos. Janos says, pretty quiet here. I am back. Okay, was there a move on the Canadian due to the Canadian employment number? Let's take a look and see. Let's see on Chicago Quant too. Let's put it up first up on J4X, just to give you a flavor of what's going on there. There it is right there. And it looks like there's more strength than selling. That's there. Let's see and then there's the algorithms. And you can see we're at 87 versus 89, so there's a little pressure on it. Let's put it over here. There it is right there. Yeah, it's gaining against the dollar. I'll show you in a second right there. It's gaining against the dollar. And then let's see. And the weekly is breaking down. You can see the fast is trying to, it's broken the manifold there. Let's see. So it doesn't. I guess there was some, but not enough. One thing's for sure is the market seems to be totally stalled. Coffee au lait. Yeah, it seems to be stalled. There doesn't seem to be a lot of conviction in this market. It doesn't seem like there's a lot of desire to do anything. What I was talking about earlier, Janos, I'll go back to it. I want to show you this. This really is catching my eye. I don't know if you were around for it or not, but the bond, the 30-year bond, we were talking about the bonds for a little while here, and the 30-year bond itself right there acting awful firm, making a higher low here, not taking out this low. It looks like literally a reverse head and shoulders. And if they start to break out and take this area here, that could bring in some buyers. Now, everybody and their up until their kitty cat or their pet dog knows that the Fed wants to raise rates just a couple more times with quarter pointers. So this literally could be a dollar cost averaging signal that they're saying, okay, we know that this is not the bottom, but we know we're close to the bottom. Let's buy a little bit more. And it seems like they're stepping up and starting to buy again in the bonds, which is, to me, is kind of surprising because, they know that, they're going to raise those rates. Yeah, I just kind of don't really have much more to say about it than that. But look at that head and shoulders, the reverse. All right. Let's see. From the Canadian, we're up on Canada, aren't we? Yeah, that's usually where we end. So let's go back to the currencies, and we'll go over to the South African Rand. see. There's the rand. You know, the rand has been going up and gold has been firm. It's been kind of bottoming. Let's see if we can put it up on J4X here. There we are. Now you can see gold for the last 3 days or 4 days now showing pressure coming down from the 1950-ish and 40-ish area down back to the 1920-ish area. Kind of not aggressive. Now, I ran across an article today. I didn't read it. I saved it, and I was wondering about it. Let's see what the numbers say. It could be a very interesting article. The title is something about central banks have never bought this much or something like that in gold. And they show like a gold vault, picture of a gold vault. So let's find that. Let's see, where do I go here? Go right there. There it is right there. Let's move that over. Let's just see what that article is trying to tell us. Because, you know, we have a lot of people that like the metals. So it says here that the global central banks reported net purchases of 55 tons in July. According to the latest data compiled by the World Gold Council in March, April, and May, central banks reported net gold primarily due to Turkey selling 160 tons of gold over. Oh, I didn't realize they were pushing that much gold out. 160 tons of gold over that 3-month period. According to World Gold Council, this was a specific response to local market dynamics and didn't likely reflect a change in the Turkish central bank's long-term gold strategy, which is probably to be long. Okay, that's interesting. I didn't even know that Turkey's involved in this situation. This was confirmed in June when the Central Bank of Turkey flipped back to buying it and adding 11 tons of gold to its reserve. It continued increasing its reserves in July with a 17-ton purchase. And according to the World Gold Council, Turkish government reinstated gold import quotas in early August. It remains to be seen whether that will lead to renewed central bank gold selling should local gold demand remain elevated. Well, with the stagflation going on, I would think so. It says here that the Turkish government recently raised the country's inflation forecast to 65%. That hurts. All right, so it was Turkey pushing gold out, and the world was buying it. And that makes total sense. Okay. Just thought I'd show that. I like the picture. I think the picture's funny. Look at the picture there with the vault and gold just sitting in bars and kind of empty. They got the pallet jack there, the whole bit. All right. Let's get rid of that. Bink. From there, we'll move over to... That was the South African rand, so we'll do all the metals from here. Let's take a look at silver. Well, let's do this. Go here. So we're going to put South African rand up on J4X just to emphasize what we're looking at. Right there. And then, right here, let's go over to the other. And right there it is. There is silver. See, silver is unchanged. You know, it's been falling for those days that the South African rand has been... Now look at that. They're just showing, it's been rising, so that means that silver should have been dropping, and it was. Now it's trying to curve a little bit. Then from there, we go over to the copper market, and if we'd had a solid currency of Japan, it would be, we'd be able to follow the action through the copper market. All right. All right. Let's take a look at platinum. There's platinum. Still in the sell and moving down. But the weekly is holding up. Maybe that's the sign of, the fall season is usually one of the more positive times of the year. So that would not surprise me if, we see some more strength in the end. Let's see, where else can we go? All right, so there's platinum. Now, since we have a client that's actually following palladium, let's talk about that too. Let's get palladium up there. Let's see. Let's see. Right there. There's the platinum. Palladium, I'm sorry, it's the palladium. What was interesting is how they put it into a sell there, and they're just trying to lift it. Today they started lifting it, but not enough. And we're in that weekly sell from here. So it's not. Let's put it this way: palladium is not lifting any better than. Let's take a look at copper again. Copper's probably in the same boat, like the industrial metals. Yeah, see, it's whereas we go to, let's say, silver, and it's almost challenged that high and then fell down again. So there's definitely a lot more strength in silver and gold. Gold looks a lot like the palladium pattern, but it is stronger. It's not trying to make lows. And then we'll go back to palladium. There it is again. Yeah, palladium is making lows in the last couple of days. So we're not really getting any solid metal buying. We're just, again, and the season, it's coming up. People start to buy the metals. You see where the central banks are always buying the metals. Only the desperate ones selling. Can you imagine 160 tons? What did they, I guess they used that to prop up their currency. If they would only just change their government policies, in my opinion, it would probably be a better way of seeing the economy grow. Somehow or another, they have that attitude like Mr. Biden. They hate energy, but they'll buy it from Iran. They'll buy it from Venezuela. Countries that are truly unhappy with America and have very poor leadership. So I don't understand that. If you're against fossil fuels, you shouldn't buy it anywhere, right? I mean, we produce the cleanest fossil fuels in the world. Why are we buying? Venezuela's oil is one of the most dirtiest oils in the world. Iran's oil is very good, but Venezuela? Crazy. All right. Now from there, you go over to the energy sector. There is front month oil. You see it's flirting with the highs the last 4 days, and it doesn't seem to care. Let's go take a look at the Brent on J4X. Same situation, playing with highs the last 4 days, and it don't care. And you see the fast has dropped underneath the slow. In this case here, the fast, or in our case, the oil October contract tried to get into a sell, but it was a red and a green. And here we are back above, trying to be in the green totally. All right, now, what other things can we point out? So from oil, the front month contracts trading at 87.31. I believe the December contracts are about 86 or 85.90, something like that. 85.73. It's even worse. So it's $1.50 difference, which shows you the hot demand they have up front here now. And then from there we go over to natural gas right there. Natural gas is trading at $2.62. It's been lifting. Let's put it up over on J4X. Right there. 2.62 you see the same thing? 262.40. In this case, 20, 30, 20. So 262.20 as we speak. Now you see there's a 19 bid and a 25 offer. Now 23s trade here, and their market's the in between. So that's natural gas. Natural gas is doing its best to lift, and it's just a matter of time where it finally fails at it. But let's take a look at the European natural gas company down in Spain. And for that, we go over to, where do we go? Right here. So we can see it on, I guess that's it right there. Let's put it up on there. There it is. And let's put it up over on J4X. Right there. So you see it's trading at 26.51 with a 57 offer over on Chicago Quant. We are basically sitting there in the same situation with just a little bit above the 50 area. And you can see we're in a daily buy for the last 2 days. And Chicago J4X is at 60, was that 56 versus 32. So it's in a buy also. You can see 2 days of green. And you can see here it is piercing. Looks like, did it do it last week? I think it went into the weekly buy last week there. Yeah. So it went into the weekly buy last week, and it's trying to stay up there. They're trying to knock it down a little bit on the first couple of days of the month, but you can see now they're trying to lift it. And this is a energy company out of Spain that trades oil, natural gas. And so it's the only way we can really see the market at this point, on a monitor type of situation. All right, traders, what else can we say? Anybody want to see anything? If not, we're going to get out of here. It's Friday, TGIF. It's been a very slow, lethargic day. I'm trying to think what should I call the title of this today? I know we had a headline before that talked about the difference between bonds and currencies, but I think that's pretty much the type of title we're going to come up with. It'll say something about currencies and about bonds. So let's see. I guess it comes down to the song at this point. So, happy trails to you until we meet again, which will be Monday. Happy trails to you, to all our trading friends. Traders, have a safe and a smart weekend, and we will catch you all on Monday, the 11th, the day that will live in infamy, and that is the World Trade Center destruction. Watch Trading Places if you want to relate to our brethren in the trading world. Watch Trading Places. You'll see the floor live and happy and action trading and orange juice and knife and cotton and so forth, and you'll see the oil pits in the distance like the old days. So Trading Places with Bill Murray and Dan Aykroyd. So, and Jamie Lee Curtis and a few other good ones in there too. This is Doc saying arrivederci.